We're going to start with the popular bull or bear case. Let's go with Broadcom. Austin.
Broadcom's an investment that I like, mainly because it has great exposure to the recent AI trend, where they currently have about 10% of their revenue allocated to AI, and that's expected to grow to about a quarter of their revenue for Broadcom over the next couple of years. We think that allows them to kind of generate significantly above market growth while trading at a market multiple. We also like it because it pays a really nice dividend and also buys back a lot of shares.
Adam, bull or bear?
I'm also a bull on Broadcom, and I think Austin characterized it very well. There's a lot of AI-related spending that's going to go on in data centers, and Broadcom is going to benefit from that significantly over the coming decade even. And while everyone's talking about some of the more, let's say, sexy names related to AI in the semiconductor space, like a NVIDIA, the Broadcom is there, and it's going to be a huge tailwind for them, and it's a more reasonable valuation than some of the other names that everyone has jumped on board over the last few months.
Adam, bull or bear on UPS?
Like a centaur if it was half bull and half bear. How's that? I think UPS with all the uncertainty around when the most telegraphed recession is actually going to happen. I think UPS might be in the penalty box for a little bit, and as they work through their labor issues, it's just hard to. I'll if I have to go bull or bear, I'll go bear. As they work through their labor issues, it's just hard to see the stock getting much of a bid in the near term. So I would keep it on the watch list, but I would hold off for now.
Austin, bull or bear on UPS?
Yeah, I'll make this a little easier. I'm going to go with bear, as I think that the current labor negotiations are going to be a drag on margins and the share price in the short to intermediate term. I think over the longer term, it's a buy, but we need to see the valuation more closely reflect the current fundamentals, and we need a little bit more clarity on where the labor negotiations end up, so we get a better view on what margins will look like. The story behind the name has been margin expansion on lower volumes, so we need more clarity on those margins going forward.
Austin, bull or bear on Philip Morris?
I like Philip Morris. It's been beat up a little bit this year, but it continues to have kind of the global transition from cigarettes to less harmful nicotine products, which we think is kind of a secular tailwind for them. It's not all that expensive, generates a lot of cash, and has exposure to some really high quality markets as consumers transition from more harmful cigarettes to less harmful vaping and heat not burn products. And they're actually going to be expanding into the US with some recent transactions that have gone down. So we think that that's a relatively solid tailwind for a business that offers a decent dividend yield.
Adam, bull or bear on Philip Morris?
I'm also a bull on Philip Morris, and I think Austin covered the company's specific reasons quite well. I'll just add that, I think we've had a period year to date where growth has been in favor as people have anticipated an end to the Fed, interest rate cycle. And I think now it wouldn't surprise me if we see some value stocks like a Philip Morris do much better over the next 6 to 12 months as kind of the market gets a little more realistic about where we are in the cycle.
Adam, bull or bear on Union Pacific?
I'm a long term. I'm a bull on any railroad and any infrastructure play like a railroad, in that you're never gonna. They have an asset that can't be replicated in terms of the tracks, and with a good balance sheet and a nice dividend. You can't go wrong over the long term owning a railroad.
What about in the short term?
There's a lot of different pieces in a railroad, right? But anything that's tied to sort of economic activity, there's always a risk if there is a recession and it's deeper than people think it is. But we've been waiting for that forever. It hasn't happened. So I think you're pretty, I think you're pretty safe owning an asset that is going to be around for a long, long time. And that is sort of a key part of national infrastructure. There's an element of like national security that's related to railroads. So I know there's been a lot of negative press, not Union Pacific, of course, but with derailments and other issues. But the industry will work through all of that, and and I'm short and long-term bullish on Union Pacific.
How about you, Austin?
I too am a fan of railroads, as Adam. I think, we're both infrastructure bankers at one time, and they definitely tick that infrastructure box. I'm not a huge fan of Union Pacific here, mainly because their business has traditionally been the west to east trade route coming from Asia. And as we've seen, the reshoring of manufacturing in the US, or as we expect the reshoring of manufacturing to take place in the US, I think there are probably other railroads that will take share from Union Pacific on the global trade market share basis. And so I think there are other places to invest. I think there will be headwinds for Union Pacific over the next kind of 2 to 5 years. And I don't think that the current kind of valuation supports that. So there are other places to put your money, which may not be as obvious as we see the kind of relative volumes of Union Pacific slow down.
Austin, bull or bear on Lockheed Martin?
I'm a bull on Lockheed Martin. There's a lot of demand for military equipment. I believe that over time you're seeing militaries build up their arms in order to protect against more dangers globally. And the issue with Lockheed so far has been the fact that they can't produce to the amount of demand that they have. So supply has been short. They're fixing those supply issues, which should be a tailwind for the company over the next, call it 1 to 2 years.
Adam, bull or bear on Lockheed Martin?
Look, I'm a bull on Lockheed Martin because the world is and always has been a very dangerous place, and that's not going to change anytime soon. There are any number of geopolitical issues currently at play that would lead countries all over the world to increase defense spending. And there's frankly not that many companies that can make the kind of products that are required for these situations. And Lockheed is one of them. So that creates a nice multi-year tailwind once they work through supply chain issues, and that's why I'm a bull.
Adam, bull or bear on Tesla?
I'm a bear on Tesla, and not just because they got downgraded today by Adam Jonas at Morgan Stanley. I'm a bear on Tesla in the sense of the stock price, not the company itself. Look, I think they're if you've ever driven in a Tesla, it's a great car. It's fun to drive, but there is so much competition coming. And the valuation is such, and the cult of personality that has existed around the stock from the very beginning, it tells me that it's just a risky investment at this point. I'm bullish on electric vehicles, and then the question becomes, what's the best way to try to participate in that upside? And Tesla at its current valuation, and the run the stock has had over the last probably 12 months, sort of makes me bearish on the stock, but not on the company.
Austin, bull or bear on Tesla?
I'm a bear on Tesla mainly because the current valuation assumes they take significant amount of market share from the rest of the industry. And for an industrial company that has to produce their product in factories, it's very difficult for them to get that much of a first start advantage. So as the other players kind of step in, I think that margins and actual sales growth is going to decline, which makes the current valuation difficult to justify.
Austin, bull or bear on Verizon?
I like Verizon at these levels. They've had some issues over the last year or so with management and the transition to 5G. But as we get through the remainder of 2023, cash flows are expected to increase substantially as the CapEx kind of weans off the 5G expansion, and operating cash flows remain strong. So as we get through the year, you should see an acceleration of cash flows, which is extremely supportive for the existing dividend yield, and also the valuation at a mid-single digit earnings multiple.
Adam, bull or bear on Target?
I'm a bear on Target. I think that there are a number of headwinds that make it a tricky investment at this time, despite Target being a wonderful franchise that may do very well in the future. But currently, there are some issues around boycotts because of certain products and that they're supporting. And I'm not taking a political view on whether I agree with the boycotts or not. All that matters is that they're happening, and that affects revenue. You don't have to agree or disagree with the reasons. It's just a fact that it's happening. And then there's an issue around student loans, and as folks around the country start to have to pay their student loans again, that's going to take away disposable income, some portion of which probably ended up at stores like Target, which creates just another overhang that they're going to have to overcome over the next few years to kind of get the company back on track.
Austin, bull or bear on United Health?
I'm bull on United Health. It's the largest health insurance company in the U.S. In addition to having a great health insurance franchise, they also have Optum, which is improving outcomes for patients. And you have this secular tailwind in the aging population in the U.S., kind of driving revenue growth for United Healthcare going forward. Recently, there's been a bit of an opportunity created to buy the shares at a discount as management came out and said some of their claims will be at elevated levels over the next couple of quarters. But I don't think that's a long-term issue for the company. I think it offers a great opportunity to buy the stock at a discounted price today.
Adam, bull or bear on Medtronic?
I'm a bull on Medtronic for many of the same reasons that I would also say I'm a bull on United Healthcare, which is that medical devices have had a tough go over the last few years as elective surgeries stopped, but that's created a bunch of pent up demand, particularly amongst elderly folks that were nervous about going back to hospitals, and now they all want to get those hip and knee replacements and those insulin pumps and everything else. So that creates a nice little tailwind for Medtronic, combined with an overall just an aging population, particularly here in the U.S. Is going to require more demand for Medtronic's medical technology devices, and there's also going to be growth around the world. I think Medtronic has a big presence in China, and that's also going to grow as more and more people get access to healthcare.